Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets start trade on a healthy note as investors cheer headway made on US-China trade talks. Prime Minister Modi endorses Donald Trump for a second term as US President at a gala event held in Houston last night. Finance Minister Nirmala Sitharaman says that the government will evaluate the fiscal position closer to the next budget in February, even as Moody's puts out a note warning of fiscal slippage post the corporate rate tax rate cuts. The GST Council lowers rates on premium hotel properties. Taxes are hiked on caffeinated drinks. Care Ratings downgrades Reliance Capital's debt worth $5 billion to default. Let's talk about the US markets now. US stocks closed lower on Friday, recording their first weekly decline in a month as investors looked beyond the litany of central bank decisions over the past week and focused on the state of the US-China trade talks. Bloomberg's Renita Young gives you a rundown of Friday's Wall Street action in this report.
U.S. markets ended lower on Friday as the S&P 500 saw tech shares leading those declines, all happening as investors digested a slew of central bank decisions during the week, and equities traded a little extra volatile because of quadruple witching, which happened on Friday. This is when options and futures on indexes and stocks expired. Now, we did see the Fed injecting a little bit more liquidity into the market, and the focus is now likely to shift back to U.S.-China trade tensions. And we did see quite a few movers during the day. Roku falling more than 20% after the stock was rated as a sell at Pivotal Research Group. And we also saw JCPenney shares rising during the session as it preps for talks about its debt ahead of the holiday shopping season. And earnings will be next week, which will include AutoZone, CarMax, and Nike. Meanwhile, Treasuries advanced for a fifth straight session. Oil gained, and so did gold, climbing back above that $1,500 an ounce level as the U.S. dollar paired a drop. And that's a look at your Friday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's have a look at the Asian markets as well. I'm joined by Paul Allen of Bloomberg News. He's joining us from Sydney. Good morning, Paul. How are we looking at trade in Asia today? Tokyo is shut for a holiday, but how's the rest of the region looking?
That's right, the autumnal equinox in Japan, so our markets there closed for today, but we're up and running here in Australia. Now, as Renita mentioned, there wasn't a great close in US markets on Friday, but we're off to a fairly bright start here in Australia. The ASX already up by almost 0.5%, and across the Tasman in New Zealand, the NZX also higher by 1/3%. We've got the Kospi trading flat right now in Korea. We saw some pretty dreadful export numbers out of South Korea a little earlier on. Exports for the first 20 days of September slumping almost 22%. And if you look at chip exports, they went down nearly 40% in the first 20 days of September. This is South Korea grapples with the fallout of not only the US-China trade dispute, but its own trade disputes with Japan as well. If we have a quick look at commodities, we've got West Texas stabilising at the moment, 58.79, even as Aramco says bringing back that production at the Abqaiq facility could take months. Gold, meanwhile, $1,516 an ounce. Back to you.
Thanks so much for that, Paul. Now, the big talking point over the weekend was an event called Howdy Modi in the United States. Prime Minister Narendra Modi and US President Donald Trump received a rousing reception from the Indian diaspora in Houston. Both leaders addressed the crowd where they spoke about a host of issues ranging from terrorism to new defense deals. Here are some of the key highlights of the event.
भारत में सब अच्छा है, सब चंगासी, બધા જ મજામાં છે. అంతా బాగుంది. ಎಲ್ಲ ಚೆನ್ನಾಗಿರೆ ಎല്ലാം ಸೌಖ್ಯಂ सर्व छान चालले आहे সব খুব ভালো सबू भल्ला अच्छी साथियों हमारे अमेरिकी मित्रों को ये आश्चर्य हो रहा होगा कि मैंने क्या बोला है। प्रेसिडेंट ट्रंप और मेरे अमेरिकी मित्रों, मैंने इतना ही कहा है, एवरीथिंग इज फाइन। देश के सामने 70 साल से एक और बड़ा चैलेंज था, जिसे कुछ दिन पहले भारत ने फेयरवेल दे दिया है। आप समझ गए? ये विषय है आर्टिकल 370 का। आर्टिकल 370 ने आर्टिकल 370 ने जम्मू कश्मीर और लद्दाख के लोगों को विकास से और समान अधिकारों से वंचित रखा था। इस स्थिति का लाभ आतंकवाद और अलगाववाद बढ़ाने वाली ताकतें उठा रही थी। अब भारत के संविधान ने जो अधिकार बाकी भारतीयों को दिए हैं, वही अधिकार जम्मू कश्मीर और लद्दाख के लोगों को भी मिल गए हैं। साथियों, अब समय आ गया है कि आतंकवाद के खिलाफ और आतंकवाद को बढ़ावा देने वालों के खिलाफ निर्णायक लड़ाई लड़ी जाए। मैं यहां पर जोर देकर कहना चाहूंगा कि इस लड़ाई में प्रेसिडेंट ट्रंप पूरी मजबूती के साथ आतंक के खिलाफ खड़े हुए हैं। मैं कल एनर्जी सेक्टर के सीईओ से यहां ह्यूस्टन में मिला। भारत ने कॉरपोरेट टैक्स में भारी कमी का जो निर्णय लिया है, उससे वो सारे के सारे लोग बहुत ही उत्साहित नजर आए। उनका फीडबैक है कि कॉरपोरेट टैक्स कम करने के फैसले से सिर्फ भारत में ही नहीं, बल्कि ग्लोबल बिजनेस लीडर्स में बहुत पॉजिटिव मैसेज गया है। ये फैसला भारत को और ग्लोबल कॉम्पिटिटिव बनाएगा। आने वाले 2-3 दिनों में प्रेसिडेंट ट्रंप के साथ मेरी बातचीत होने वाली है। मैं उम्मीद करता हूं कि उससे भी कुछ पॉजिटिव रिजल्ट्स निकलेगा। वैसे तो प्रेसिडेंट ट्रंप मुझे टफ नेगोशिएटर कहते हैं, लेकिन वो खुद भी द आर्ट ऑफ द डील में माहिर है। और मैं उनसे बहुत कुछ सीख रहा हूं।
Under Prime Minister Modi's leadership, the world is witnessing a strong, sovereign, and thriving Republic of India. In a single decade, with the help of Prime Minister Modi's pro-growth reforms, India has lifted nearly 300 million people out of poverty. And that is an incredible number. Incredible. That's incredible. In the next decade, 140 million Indian households will rise to the middle class. In both India and the United States, we're seeing something really remarkable. Our people are prospering like never before because we are slashing bureaucracy and cutting job-killing red tape. Yesterday, we were thrilled to hear about the Indian company Petronet's pledge to purchase up to 5 million tons of LNG per year from the United States, which could lead to billions of dollars of LNG exports to India in the coming years. And we have plenty of it. Over the last year, crude exports to India have grown by 400%, and liquefied natural gas exports continue to soar at record numbers. Thank you. These tremendous exports not only expand employment in America, but they increase freedom and security for India. To keep our nation safe, the United States and India are forging an even stronger security partnership. U.S. defense sales to India have also reached $18 billion over the past decade. We make the greatest defense mechanisms and equipment anywhere in the world, and India knows that well. We're looking forward to concluding several new defense deals very soon. There are a lot of them in the works.
All right, now, but the big talking point from Friday over the weekend continued to be the fact that the government had announced a 1.45 lakh crore stimulus for the Indian economy by slashing corporate tax rates. Neelkant Mishra of Credit Suisse believes that while India lacks risk capital at the current juncture, the lower tax rates will help companies boost their capital buffers for any slowdown scenarios arising in the near future. Listen in.
I suspect this is not the first one. So if the government has realized that we need, because any economic framework I think needs many changes, not just one, and therefore I think this is just the start of the process. I view it from two different, let's say three different approaches. The first is that India lacks risk capital, right? At this stage of per capita GDP, the nature of savings is mostly in deposits or a very fragmented equity. There is not too much of aggregated equity which is available. So if you need, for example, in the example I used in the note that you're talking about, if you need 50 million tons of steel capacity and 200 gigawatts of power capacity, you need at least $100 billion of equity. Now, where will that come from? And aggregating it through the stock markets, because the SIPs, etc., are doing well, is not sufficient. Now, what the government has done effectively, so this shortage of risk capital is something that other emerging markets at this stage have done it through exactly what we decided not to do, which is socialize the losses and privatize the gains. So in China, for example, the banks give a lot of loans. The loans that work create billionaires. The loans that don't work, then the losses get spread out over all the depositors who are paying 2% interest rate or getting 2% interest rate on the deposits. Now, this is something that we've decided not to do. So where will the equity come from? And the government has more or less decided, see if you reduce the tax rate, you're leaving 10% extra with the corporates, and this is very important for equity generation. So that's the first thing. The second thing is that this attracts significant FDI. Now, in the last 20 years, every country in the world has cut corporate tax rates. In the last 20 years, everyone has moved to a 20 to 25% bracket. We were the outliers sitting at 35%. So this is a very meaningful change. What this means is that the intent is to attract foreign capital, which is very important for the risk capital generation that I was talking about. Most people don't know that almost 40% of Chinese exports are from foreign-owned firms. And it's very important to attract that kind of capital, and this tax rate, I think, does that. The 15% tax rate for new businesses, new companies, is a reaction to what's been happening in Southeast Asia, that as companies start to explore moving out of China, countries are competing to attract them, and this is a very welcome reaction to that the government means business. The third aspect is that you have, say, 145,000 crores, 1.45 trillion rupees. Either the government spends it or the companies spend it, right? So it's just a transfer. It is a lack of a transfer now. Now, the government, in terms of capital formation, I think has kind of run out of ideas. So how many more highways can you plan and build? As we are seeing, they're starting to see that at the current pace of growth, at the current level of GDP, some of those roads may not be viable. The railways, though there is enormous capacity to invest, or the potential to invest, the ability to spend faster than 1.6 trillion rupees a year, which is several times what we did 6 years back, but still, that's not big enough. So what will the government do with this? And therefore, it is much better to leave it with the corporates. And I don't think this will get invested very quickly, because the companies that are deleveraging will accelerate the deleveraging. The companies that are sitting on surpluses anyway had no avenue to invest, so they're not investing. But over the medium term, this allows for the equity capital to accumulate on which the companies can build their investment case, even if it is 2 to 3 years down the line, so that we do not have the pyramid cases that we had in the last cycle, where people borrowed at the parent level and made that equity at a subsidiary level. So when even at the whiff of a downturn, the whole house of cards collapsed. Now, that kind of situation can be prevented if you allow this equity to accumulate in the companies. And the most obvious impact of that is in the banks, where the fast-growing banks every few years need external capital. I think the necessity of that goes down significantly because of this.
Okay, let's also take a look at what corporate India had to say about the decision.
First and foremost, we have to compare this with the effective tax rate applicable in the rest of the world. And India is now entering into a realm where we are already offering to the world that we are as good as any other part of the world, and maybe better than many of the advanced countries in terms of the taxation structure. So I would say 22% basic tax can move all the way up to maybe a 27% ETR. But a good number of companies in India are in excess of 30 to 36% range even today. So that additional tax benefit of ranging between maybe a 10+% is going to be a major attraction for FDI to come in. And that also, in my opinion, like somebody mentioned about, I think Bhutani or Pranav mentioned about timing of this, post the trade war initiation between America and China, and the current visit of the Prime Minister to America, and where we are expected to be announcing a lot more of benefits, inviting people to come and set up their manufacturing instead of China into India. It's a major move. It's far beyond even Article 370, in my opinion, as far as an Indian corporate is concerned.
At the least, what it has done is it has given a boost to the sentiments.
Sure.
And it does play out in an economy which is plagued right now. And I feel over a period of time, it will not be short term, but over a medium term or a long term, there will be capital investment that will happen in the country. So immediately, whether it will spur consumption, I am not very sure.
I would look at it slightly broader, larger picture than just restricting it to IT services. You know, when you look at an investment climate in a country, you look at stable geopolitical situation, you look at lower inflation, you look at ample availability of resources, and then you look at conducive tax policies. And I think on the fourth front, they have really taken a big, bold step forward. And I am very confident that this will ignite a certain amount of investment across sectors. And I wouldn't worry too much about demand because, you know, if you go back in history, if you have right capacity, you would be able to cater to demand no matter where the demand exists. So maybe the demand is little lower in the country today, but this could give a big boost to Make in India, and you could be servicing orders on manufacturing for US or Europe or anywhere else in the world, just the way IT services did, 20 years back when we started our journey.
All right, heady highs on the benchmark indices and indeed for the rest of the stock market as well on Friday. I'm sure a lot of you are wondering where the markets are going today. Agam Vakil is here to tell you all about the day's trade and also what's happening in the futures and options space. Agam, just before the Friday session, we were talking about a shift in the base lower, but then suddenly the whole dynamic has changed and it changes by one announcement. How are we looking at the start of this week?
Well, usually, Alex, whenever you see such a strong up move, it's usually followed by just a little more of a gain, and that's indicated by the SGX Nifty futures. There'll be a lot of system-based longs which will be triggered considering the Nifty advance, and it is currently trading at, at least a 30-day high. So at least all the system traders perhaps come in and start buying into the stock markets. Well, perhaps based on that, for now we're looking at a 1% up move at around 11,435 on the SGX Nifty futures. Likely to see a positive start today. But what about how things have panned out last Friday? Clearly, it was a day perhaps which will go down in history because we haven't seen such a sharp up move in a very, very long time. Nifty up as much as 5.5%. Mid cap and small cap indices also following through. The banking indices did well, specifically the Nifty banking index, which advanced by as much as 8.5%. But to move on and talk about your ADRs, again, a tremendous strength coming in. And we must not forget that it's also we do have the Prime Minister who is in the US right now, and so likely could have some amount of impact on the American depository receipts there. But moving on, let's also talk about fund flows. Well, the fund flow for FIs may look like a very small one, but it's a positive one. That's something to take away. DIs on the other hand also buying stock worth around 3,000 crores. So it certainly was a day where a lot has changed as far as market technicals are concerned. But in terms of contributors too, quite naturally, look at that, just 100 points contributed only by HDFC Bank. Reliance contributing 63 points, ICICI Bank, L&T, and a whole host of other stocks contributing quite substantially to this gain of 569 odd points on the Nifty. Well, moving down, have things changed when it comes to the futures and options space? Most certainly, yes. We are looking at expiry, a significant uptick as far as rollovers are concerned at around 24%. Of course, through the course of the week, we will get a better idea of how things are shaping up as far as the rollovers are concerned. But the Nifty banking futures, well, that's seeing a rollover around 20%. Let's move on and talk about your open interest distribution. And this is where things have changed. As I was explaining even last week, the 11,000 mark, which used to be a resistance, has now become a support. So that, of course, is a positive. 11,000 put is the one with the maximum open interest. Moving on, clearly that's where we've seen a little more writing. The 11,000, 11,100 puts, and of course, considering the Nifty is well above that mark. We're going to keep an eye on these levels. India VIX has come off, but surprisingly only as much as 1%. But we must remember that India VIX is a function of option premiums. And because of the fact that we saw such a sharp up move in the Nifty, well, you have seen quite naturally a considerable expansion in option premiums, which is why the India VIX hasn't come off that much. Nifty put call ratio, of course, this was again on expected lines at around 1.38. And moving on, let's talk about stocks. So, of course, we do have a whole host of companies which advanced significantly. BPCL, DLF, CESC, Cholamandalam Finance, all keeping an eye out on when it comes to longs. And in terms of unwinding, I reckon once again we will see a lot of short covering here because all the stocks are advancing and we've seen a decline, a considerable decline in open interest. So Alex, there's no doubt about the fact that well, all the parameters, all the technicals have changed, and by quite a mile. So we're going to have to see how the markets move on from here on, because this certainly was a very, very big turning point.
Thanks so much for that, Agam. All right, let's quickly take you through all the headlines from across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with President Trump, who is skipping this week's climate change debate at the United Nations, but insists his absence is not meant as a snub. Flying off to events in Texas and Ohio, he said he's very busy, but is being briefed on important matters. The debate features youth leaders such as Greta Thunberg, who are calling on governments and world leaders to do more to arrest climate change. Iran, meanwhile, is refusing to rule out war in the Middle East. This as the U.S. sends additional military aid to Saudi Arabia. Foreign Minister Mohammad Javad Zarif told CBS that he's not optimistic about avoiding conflict, but added that Iran would not be the one to start a fight. Zarif and Iranian President Hassan Rouhani are in New York for the UN General Assembly, and Iran says it will lay out a peace initiative at the event.
No, I'm not confident that we can avoid a war. I'm confident that we will not start one. But I'm confident that whoever starts one will not be the one who finishes it.
Reports from the Gulf say Iran has released a British tanker seized in a tit-for-tat move that had seen an Iranian vessel impounded in Gibraltar. China's Xinhua News says the Stena Impero and her crew have been released in what's seen as an attempt to reduce tensions in the Gulf. You may recall the tanker was detained near the Strait of Hormuz back in July after an Iranian tanker was halted at the request of U.S. authorities. Australia seems to be losing its appeal for Chinese tourists. This is the trade war and the slowing mainland economy are keeping travelers at home. The numbers of visitors from China rose only 1% in the 12 months through July. That matches the weakest growth rate in 9 years. At the same time, growth in the number of students heading south also slowed rapidly. ANZ says the trade war is causing uncertainty, especially for young people. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's also talk about the stocks that you have to watch out for in trade today. Somit Sarkar is joining in with the stocks in news. Good morning, Somit. What's on your list today?
Good morning, Alex. I'll start off with Biocon, which has received a Form 483 with 4 observations for the drug substance plan and a Form 483 with 3 observations for the drug unit planned by the US FDA for its biologic manufacturing facility in Bangalore. Now, US FDA had conducted a pre-approval inspection of these units from September 10th to 19th and even given one general observation after the inspection. Now, the company is stating that the pre-approval inspection of the new facility does not have any impact on the current commercialization plans of the company of these existing facilities. Secondly, Petronet will remain in focus because they have signed a non-binding memorandum of understanding with the US-based Tellurian to explore possibility of purchase of up to 5 MTPA of LNG from the Driftwood project. The company will also be investing close to $2.5 billion for the 18% stake in this company, in this project. Now, this deal is, if it goes through, is expected to turn Petronet into a net debt company from a net cash company, and according to Bank of America Merrill Lynch, The deal introduces a large project risk which should cap the valuations for Petronet. MCX would also remain in focus because they are seeking shareholders' approval to raise the total limit in foreign investments in the company to up to 49%. Alchem Laboratories will remain in focus because they have acquired Cachet Pharma for close to 52 crore rupees. Reliance Capital because Care Ratings has downgraded the rating on debt programs worth nearly 17,000 crore rupees of the company to D on account of the recent delay in servicing of some non-convertible debentures. Now the company is saying that the payment were delayed by 1 day due to a technical glitch in the bank servers. Cipla would remain in focus because they have received an establishment inspection report, that is EIR, indicating a closure of inspection from the US FDA for its API manufacturing facility in Bangalore. Lastly, a couple of stocks that would remain in focus because of bulk deals. Firstly, Astral Poly, where HDFC Mutual Fund has acquired nearly 6.4 lakh shares, that is 0.5% stake in the company, and the promoter has sold nearly 36 lakh, that is 3% shares in the company. Vinati Organics will also remain in focus because Vanguard Group has acquired nearly 2.6 lakh shares, that is 0.5% stake in the company on Friday.
Thanks so much for that, Somit. Let me take you through some of the stories that you'll find on the website bloombergquint.com. First up, Crystal Research estimates that the country's top 1,000 companies that are listed on the National Stock Exchange could save 37,000 crore rupees this year after the cut in the corporate tax rate. And Deutsche Bank AG is close to completing a deal with BNP Paribas SA to transfer its prime brokerage business to the French bank, according to people familiar with the matter. The transaction may be announced as early as today. Now, as we close this All You Need to Know session, where we have the SGX Nifty up about 1%, indicating a positive uptick for the stock market today as well. Do stay tuned. There's a lot more coming up in just a short while on Bloomberg Quint.